While most investors chase tech stocks, few are paying attention to a quiet performer in the LPG shipping space, StealthGas Inc., ticker symbol GASS. But here's what they're missing. In 2024, StealthGas reported record net income, nearly $70 million, up almost 35% from last year. And despite market volatility, they're maintaining that momentum. I bought shares, and in this video, I'll show you why the numbers justify that call. Let's start with the fundamentals. In 2024, StealthGas grew its revenues by 16.6%, bringing in $167.3 million. Even more impressive? Their adjusted earnings per share surged by 57%, from 1.34 in 2023 to 2.11 in 2024. That's not just recovery, that's acceleration. And unlike many small-cap shippers, StealthGas consistently beats earnings expectations, showing tight operational control and resilience in a tough industry. But there's more to this story than just earnings. Nearly 70% of StealthGas 2025 fleet days are already booked on period charters. That means cash flow visibility is locked in, even if market rates wobble. They've secured over $200 million in forward contracted revenue, $107 million of which is already baked in for 2025. And they're not standing still. The company is modernizing its fleet, selling older vessels and reinvesting in newer, more efficient ones. This strategy not only reduces the average fleet age, it boosts margins and supports their growing ammonia trade exposure. In an industry where debt often weighs down returns, StealthGas stands out. In 2024 alone, they paid off $108 million in debt. And just this past quarter, Q1 of 2025, they reduced another $34 million. Today, the company is effectively net debt-free. That gives them options, whether it's expanding the fleet, weathering a soft patch in the market, or returning capital to shareholders. In fact, 26 out of their 28 vessels are unencumbered. That kind of balance sheet strength is rare in shipping. And management isn't just talking, they're acting. The company has launched an ongoing share repurchase program. This isn't window dressing, it's a vote of confidence. When a company this lean, with no net debt, uses excess capital to buy back stock, it signals two things: conviction in their valuation and commitment to delivering value to long-term shareholders. Now, let's talk macro. The small gas carrier segment, where StealthGas operates, is seeing real strength. Global LPG trade is expanding, especially from the United States, where exports of LPG and NGLs have been rising consistently. While some analysts caution that terminal capacity constraints could slow growth in 2025, that's actually a positive for current operators. If new capacity lags, spot availability tightens, and firms like StealthGas benefit from premium rates and scarcity value. Let's be clear, this isn't just a momentum story, it's a value story. StealthGas is trading at a low price-to-earnings ratio compared to the broader market, and even below its own book value and net asset value. Multiple independent analyses point to undervaluation, even after the recent run-up. This is the kind of setup I look for: strong earnings, capital discipline, macro tailwinds, and deep value pricing. Now, full disclosure, there are headwinds. Some forecasts suggest a mild decline in EPS for 2025, largely due to flat petrochemical demand in Europe and some constraints in global terminal infrastructure. And like any shipping firm, StealthGas remains exposed to geopolitical events and energy market dynamics. But here's the difference: their contract coverage buffers the downside. And unlike pure spot players, they have revenue locked in, giving them room to ride out short-term storms. When I bought into StealthGas, it wasn't just because of one good earnings report, it was because of the full picture. Record profits, a clean balance sheet, strong charter coverage, rising industry demand, and a share price that doesn't reflect any of it. That's a margin of safety and a margin of opportunity. This is a capital-efficient, undervalued small cap that's proving it can deliver. This video is for educational purposes only. I am not a financial advisor, and nothing here should be taken as financial advice. What you're about to hear is my personal view, based on research, experience, and market observation. Always do your own research before making any trading or investment decisions. If you found this breakdown helpful, don't forget to subscribe to the channel and hit the bell icon. I'll keep bringing you under-the-radar investment stories, macro insights, and deep dives like this one. Thanks for watching, and welcome to Markets and Global Trends.